What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the charts. As you guys know, I still do not believe the bottom's in, and I'm going to show you why in this video. I do still believe we're in a bubble pop pattern. Now, I know I've been talking about a weekly open and close above the 55 EMA. Now, a lot of people think, well, we closed above it and then we opened another candle above it. That's a weekly open and close. That is not. It has to be the same candle. So far, we've had this weekly open above. I do believe we'll close below. If not, then I will consider the bottom being in. But I do believe that basically all we've had so far was a false bottom. We'll take a look at that in the charts. I'm going to show you where my targets are. I've had these targets for a while, and we actually hit one of them dead on. Now, will this be the top and we go down from here? Possibly. If not, then where will we go? We'll talk about that. So as you guys know, on the Dow, I'm extremely bearish on the Dow. As you can see right now, we got a little gap there today, but you guys know my target on the Dow is around 30,222. If we break that, I have much lower targets. Then I think we're in a severe bear market. And then you guys watch any of my prior videos, you'll see the targets. Now the DXY, so we did break our first target here, which was the 103.36. We are now below that. This is where I see a bounce. So if we do get down to the 102.65, we don't have to get down there. But if we do, I expect a big bounce there. If that breaks, we can move this target down to the 0.786 now. If that breaks, then we would look for the 101. Either way, I think this is still very bullish for the DXY, which will bring the markets down. Not necessarily bring the markets down, but when people pile into the dollar, right? This will move up. I do have much higher targets for the DXY. As you guys know, I am bullish on the DXY. I look at the markets as a whole, right? I don't just zone in on Bitcoin and hope for the best, because that's what gets people wrecked. Let me show you what I'm looking at. But before we do, if you guys are interested in trading, definitely check out Prime XBT. By far my favorite exchange. They don't trade against you. You can trade Forex, crypto, gold, silver, oil, S&P, Dow Jones, gas, natural gas, all from one exchange. You don't have to switch back and forth. I have a link down below. You can use my promo code Savvy50. That will get you up to a $7,000 bonus. Savvy25 will get you 25% off of your fees. I'll also leave a tutorial on how to use the platform at the end of the video. You can use the contest section in there, trade totally for free just to get used to the platform and, you know, try out your strategies. Never put in more than you're willing to lose on any exchange or in any trade. All right, let's take a look at the monthly. So the monthly, we've been watching this. If we have a monthly close above the 23,327, that will invalidate the hidden bearish divergence. Does that mean we bottomed? No. That means that we invalidated the hidden bearish divergence. But I still believe we have more downside for the monthly RSI. Nothing's changed in my opinion, guys. A little movement in the market does not change my macro view, right? At all. As you guys can see, if you look at this, I made a mistake on my last video Friday. I said that longs were more profitable. What I meant is, looking at this chart, shorts have been way more profitable. So what am I going to do? I'm going to continue looking for shorts until there is a macro reversal sign, which we have not had. This just looks like a bubble pop to me. Still more popping to come. I think we got much lower lows coming. Still, I don't change my view every video like a lot of these people. What I'm trying to show you guys is how markets work, right? So let's draw a trend line off of this wick and see where that gets us. If we were to have this being a, let me show you what I got here. Let's just draw some lines in. Now, I don't like looking at this as an Elliott wave structure, because I do believe it's a little bit different. It's a bubble pop pattern, but let's look at it as an Elliott wave structure real quick and just see. Let's put our 5 waves in, right? 1, 2, 3. If this was the false bottom, then we get 4. Could go as high. I'm not saying it's getting up there, but 32,388 would be another area I'm going to short. I'm going to show you what areas I'm shorting now. But then we would get down to at least the 11 to 12,000 range would be our 0.618. If we break below that, then we got about 66, 6,700. If we break below that, you know, I could be seeing around 3,500. I don't believe the bottom's going to be in until September, October of this year. I've been saying that since December 2nd, 2021, which I'll also leave that video up top. But it is showing hidden bearish divergence all the way across the board here, even if we did get up to that 32.3, right? Now, if you guys remember, I had this target in here, 28,655. And looking at that, that is, if we look at this white trend line here, looking at this as a falling wedge, right, with the yellow line being the bottom, you take from the lowest point to the highest point, the widest point of the wedge, you bring it to where it broke out, which was down here. That gets you that 21,655-ish. It's not going to be exact, but it got us this range. You can check all my videos. I've had this up there for about 2 weeks. We did hit that. Now, if that's it, it's down from here back down to this trend line, depending on how long it would take to get here, right? I'm not saying it's going to go straight down. And also, the Fed makes its decision tomorrow on the rate hikes, right? So it matches up with, if the markets are doing well, they're just going to continue raising rates. I know a lot of people think they're going to pivot, but technically, if they pivot, we have a lot further down to go, a lot faster, because usually when the Fed pivots is when the markets really start to go down fast, right? Look at it in all the past. All right, let's take a look at this 31.5. If you guys remember, this is another target. So I'm short here. If we get above, I get stopped out. I wait for this 31.5 area. I short again. And if that breaks, then I short the other one. Remember, shorts have been much more profitable in a bear market. Not many profitable longs in here. You had a nice one here, but I don't like to trade against the trend. I believe the macro trend is still down. So if we break back up here, stop me back out, and then I get in at the 31.5. Either way, I think this will be a great ride all the way down to our next big low, which will be a new low in my opinion. So this measured move is just, if you look at this dotted line from this top up here, coming down, looking at this as a falling wedge, and then go to where that broke out, that gets us at 31.5 to 31.6 range. If we do get up to those areas, I'll put in shorts. I am short now. I do have my stops above at about 29.2. So that's what I'm looking at. Remember, guys, understand leverage and what you're using. Don't go in trading 100 times leverage and all these crazy things you see a lot of these people doing. You will get wrecked. Never put in more than you're willing to lose. Learn to manage your risk. Don't put it all in one trade and try to get rich. But anyways, this is what I'm doing now. So I'm short from here. I actually got in about 28.2, but if it does stop me out, I'll just wait for the next short position, because like I said, I do believe we have a much further downside to go. Much further. So let's take a look at the 4 hour. So looking at the 4 hour, the same thing, guys. Here's that measured move from the falling wedge. If we go from the highest points right here to where we broke out, this gets 28.7, 28.6, right in that range. Remember, these aren't exact. And see how tight these lines are? Most of the guys you watch show on the weekly and stuff, and it makes it look like a little line, but it's like a $1,500 area to hit. We try to keep it as good as possible. And if you remember, if you watched last week, I told you a break at 27.2-ish. We'd look for that 28.7. That's what we did. We got right up there. I can move this out of the way now. But right now, as long as this hold, we may see that 31.6 if we break back through here. But if this breaks right now, that's about 27.5. Break below there, then you got your 55 EMA around 26. And then you break below there, you got your 200 around 24.2. It's a very good possibility we see that in the coming week or so. I do believe we'll be back down below those levels by the end of the month. Yeah, there is a little bit of hidden bullish divergence here, right here. Lower high or lower lows in the RSI, higher lows in the price action. So if this blue line does hold and we break through this 28.7, then we look for the 31.6. Then I would put in another short there. We'll see what happens. But guys, it's still looking nothing. This here is not a healthy rally, right? That's not a healthy rally. That's more downside coming, in my opinion. Now, the bubble pop pattern, this one is the .com. We had the rally right here. I told you when this weekly trend line broke, although I didn't think it was a false bottom, but I did tell you when this happened would most likely be the false bottom. It did happen over here. maybe that was our false bottom. I still think we have till September, October to hit our lows. Nothing has changed. Absolutely nothing has changed in the charts. Let's see where this weekly closes. If we close below the 25,380, then I go ultra bear mode. But even if we open and close above, if you guys look at, remember I said if it open and close above, I would consider the bottom being in. It doesn't mean it's in. Then I would start to consider it being possible though. But if you look here in the Nintendo bubble pop, look at this rally here. And I'm sure if you went back in the news back in 2010, January, February, you're going to see all kinds of great news for this, all kinds of good stuff happening. And it was just a false bottom, came down to ultimately make a lower low. Same thing we're seeing right here, guys. I have the arrow on the point. You know, this, let's see how this candle closed up here. So we did open and close above the 55 EMA over here, but it was just a reversal candle, right? We may see the same type thing here. Either way, the structure has not changed. I've been showing this structure forever. They always come down back to where they started, right? And look at the Sony, same thing. You had a false rally here, and then another bottom. Then you had another big rally, and still two more lower lows. So depending on how long the bear market be, this could take a while. But I still think bottom should be in sometime around September, October. If we get in them ranges and we're lower and it changes, I'll let you know, but I'm still looking for that. Nothing has changed. Shorts are more profitable in a bear market, guys. Have a great day. I'm out. I'll see you in the next video. Make sure you smash the likes, leave your comments down below, subscribe to the channel if you haven't already, and make sure you share the video. Tick your notification bells also. I'm out.